Good morning and welcome to Trade Talks. I'm your host, Joe Malandrino, Global Markets Reporter at Nasdaq. And for this episode, we're going to look at the ESG outlook for 2018. And joining me live at MarketSite is McQuillen. She's a portfolio manager and head of ESG at ClearBridge Investments. Thank you very much, as always, for joining us. Before we get into it, briefly explain to us what ESG is and why it's so popular with investing.
Sure. So ESG investing is environment, social, and governance investing. And the way we look at it is that we're integrating the most material and relevant factors around environmental issues, social issues, and governance issues for all of our investments, which is something that we see across all sectors.
All right, let's talk about a couple of issues that were really big for 2017. Cybersecurity and technology. How has that impacted in ESG?
Sure. So many times I think cybersecurity and data security is within the technology range, but with our analysts, we've seen it across multiple sectors. So our analysts who cover software companies are absolutely thinking about data security and customer privacy for their customers, which are the retailers, the banks, other sectors, including transportation, food. It's going everywhere. So all of our sector analysts are focused on this, and they continue to be focused on this. But if you take something like Google or Twitter or Microsoft, they are constantly applying more people as well as AI to try to remove any sort of data security, any sort of breaches that are out there on the internet.
This is really interesting. It's relatively new for 2017 in terms of how it's been in the media, but the opioid epidemic.
Oh, yeah.
I mean, you never would have thought of that as part of ESG, but it really is making a presence now.
So ESG is like thinking about long-term sustainable investments. And so if we don't have a sustainable society, it's very hard to have a sustainable investment. So one of the crises that we're looking at is opioid crisis. And this is a highly addictive heroin, prescription drugs, and it affects multiple households and employees, if you think about it. So we've had a recent engagement. We engaged with all of our companies. It was CVS, which we know is one of the largest pharmaceutical companies. And we went through, our healthcare analysts went through their policy on how to appropriate the drugs and how to make sure of safe disposal and how to make sure that the physicians are prescribing the right amount. And so they've put up over 3,000 safety disposable kiosks around 43 states. They're taking it very seriously. They've tried to educate with their pharmacists over 300,000 students on what drug addiction is and to make sure it's more preventative, to make sure that as young people get older, that if they have a pain management situation, they're not over abusing or taking or getting addicted to the drugs.
All right, and how about financial inclusion? Because this is really a global story.
Sure. So financial inclusion is something that's come up with our our financial sector analysts, where if we take a company like Visa, electronic transfers and payments, and when you think about emerging markets or countries where most people don't have access to banks, to credit cards, to a private bank or savings accounts, they do have access to a phone, and through the phone they're able to do digital transfers and digital payments because they are not able to do the cash or the check writing. And so that opens up the marketplace for a lot more business transactions as well as payments through their phone when there isn't the infrastructure or financial services. It's not too dissimilar to access to medicines when we think about having access to something. This is access to capital. And similarly in the US, there's a company that we also own, Charles Schwab, which has done a great job in trying to educate and to talk about financial literacy, specifically with a focus on millennials, and so the next generation, and how to make sure that they're included and understand what they're investing in through digital transfers as well.
All right, and let's wrap it up with impact. How do public equities make an impact? Why is it sometimes overlooked?
Yeah, so when people think about impact investing, they're really usually thinking about very unusual direct private investment projects, something about irrigation projects or malaria nets, which are all important and high impact. But if you think of public equities, large corporations that are global and the amount of scale that they have, so hundreds of thousands of employees, 200 countries, multiple products that are in our homes that we use every single day, but also lots of services and devices that we all need as a society. They have the capital not only to make change, but they also have the ability for us as investors to own those shares, to meet with management, and to communicate what we think they can improve on as long-term investors. So when we think about public equities and impact investing, we're not just thinking about the shareholder return, which is paramount, but we're also thinking, how is this company investing into the future?
Right, I think it's still very important for millennial investors as well, because they seem to really be focused on that, not just simply the balance sheet.
That's right.
All right.
That's
well,
right.
Thank you very much, MJ, as always, for joining us.
Thank you very much.
And traders, thank you. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.